All right, guys, welcome back to another episode of How to Invest in Commercial Real Estate. Man, we don't have Braden today to open the show. He is at a wedding in Utah. But man, we're always trying to find new people to interview to understand how they got into commercial real estate. And today we've got a great guest. His name is Kamyar Rezaie, and he is out of Los Angeles. And he's kind of a lending expert, has a boutique operation out there called Wembley's. And he's going to be telling us about how he got into commercial real estate. And he's going to be telling us about the state of the commercial lending market. Kamyar, welcome to the podcast today.
Welcome.
Thank you for having me.
So we usually start off the show and have our guests just kind of tell the audience how they got into commercial real estate, because that's really what we want people to do, is to get in the industry in some form or fashion and learn this game. And so tell us a little bit about yourself, maybe where you're from, and how did you get into commercial real estate?
Absolutely. So I started in the real estate industry back in 2004. I graduated UCLA in 2002. 2 years later, I decided, I really like to get into the real estate space. And the reason for that is my father was refinancing a property, and the gentleman that came to the loan officer that came to the loan doc signing, the way he was treating my dad, the customer service and everything was not what I expected from such a deal. So that really triggered me to think more and go get my license. First, I became an agent in April of 2004. Then I realized I could become a broker. So like December of 2004, I became a broker. And I started, in the residential space up to about 2008 until we had that big, meltdown in the economy.
Yeah.
After that, I started helping my clients save their homes via loan mods. And while doing loan mods, I was, introduced to a lot of high net worth individuals that had helped them save their homes. So they were all in the commercial real estate aspect, and they said, you should really start focusing on commercial real estate because we'll become your clients. You save their home, our family has a roof because of you. And for us, that's where I started back in around 2010, 11, when the market was still shaky. Started doing, commercial real estate lending, helping my clients who had, issues with their loans and everything, refinancing them. And slowly but surely, I grew my my network of clients and just kept doing different industries.
Excellent. I have a couple questions after that. First of all, you said you helped high net worth individuals keep their homes during the housing crash in 2008. Maybe just give us a little bit of color on how did you go about doing that?
So, a lot of these homes we had, they had loan balances to say 2, 3, 4, 5, some up to $8 million, mortgages on their primary homes. And because business was extremely slow, or some had no business, we negotiated with the banks. It's either it would have gone on their balance sheet for closed notice of default, or they could have worked with the client to reduce their payments. Put all the balances that they didn't pay on the end of the loan, and just do so because banks were in a lot of trouble. They repoed a lot of the homes. It was not good for them. The federal government was on them to help people keep their homes.
Yeah. Okay, that's great.
The loan process was kind of like getting a loan. They were looking for particular loan ratios and just, making sure that once this loan mods were done for the client can actually pay.
Okay, and the other question I had, do you have a question?
No.
So you transition into commercial real estate. You have this kind of list of clients, high net worth individuals. What is kind of a typical, I know you may do loans across asset classes, but what's your bread and butter? What is your typical deal look like? Retail, multifamily, 2 million, 20 million?
It's roughly about 3 to 5 million owner user SBA loans or conventional loans.
Okay.
Bread and butter.
Okay, so just because our audience may not be familiar with an SBA loan, maybe you could just describe what the SBA loan program is and how it helps owner users get into buildings.
Sure. So SBA loans you can buy a commercial building with as low as 10% down. You have to occupy 51% or more of the building for your business, the operating company. And they look at the last 3 years tax returns, and some banks qualify off of the one of the last 3 years tax returns. Other banks qualify 2 of the last 3 years of tax returns for qualification purposes. And it allows you to own your own building. On the SBA, it's a 25-year amortization. So if you stay there for 25 years and you don't refinance, you pay off the building and you own it being clear.
Yeah.
So I don't know much about them either. So what you're saying is you can own your own building and you have to occupy at least 51% of that, and you could lease out the other 49%. Is that correct?
Right. That's
Okay.
correct.
And you get in for low money down 10%, which normally it would be 20, 30%.
Yeah, right.
So let me ask you on the qualification on the tax returns. So are they, tell us about that. Like, let's say that I want to go buy a $3 million building. What do I need to qualify for that loan?
Basically, it's a $3 million building. You look at a loan amount of $2.7 million. There's two types of SBAs. There's an SBA 7A where the whole loan is one loan where the bank gives it. There's the other SBA loan, is SBA 504, where they split it into two loans. The first 50% is a traditional conventional loan. The following second lien of 40% is the SBA loan.
Okay.
And depending what rate you're getting, that interest payment of your mortgage, which is the principal and interest, plus your property tax, plus your insurance, that they look at your cash flow of your business. They add back, the rents that you paid for where you are, and they add back the depreciation. And then, and then based on the ratio, they see if you qualify or not.
Okay, so did you understand that? Let's say they're paying rent over here for their space. They're going to add that back to their income to help them qualify for the new payment on the new building.
Oh, okay.
Is it like a 1 point? Sorry, say it.
They're not going to have that rent anymore once they go into the new building. That's why it's an add back.
Yeah, right. Okay. And then is it like a 1.2 debt coverage ratio on the new payment, or
some are 1.1, some are 1.25. Every bank is different.
Okay. So, but if let's say that there's another tenant in the building occupying the other 40 to 49%, can that income be included as well to help cover the payment?
Majority of the banks do not include that rental income upfront when you buy in the building. They make sure you qualify for 100% of the payment on your own.
Okay, that's interesting.
What about interest rates, amortization? Is it a fixed rate? How do they compare to maybe a more conventional commercial loan?
Sure. So on a SBA loan, amortization is a 25-year fix. On a conventional loan, they're typically 20-year fix, so they're higher payments. Okay. On the SBA, you can have a 5-year fix, 7-year fix, 10-year fix, and you can actually have a 25-year fix amortized over 25 years, nice. Which a lot of people are not aware of. And I have placed about 95% of my clients on 25-year fixed amortized over 25 years.
And the rates, the actual interest rate, is it similar to what you can get on a typical commercial loan?
No, they are typically less because again, it's an owner-user building versus an investment property. You're more likely to let go of the investment commercial property versus an owner-user where you're operating your company out of. So they are typically less.
Like in our business, when we're buying, multifamily or retail, we're typically getting a spread over the 5-year or the 10-year treasury. Like they'll say, 280 over the 5-year treasury, and that's my rate. What benchmark is the interest rate for the SBA loan? And like, what would be a typical rate today if, let's say, one of our listeners is thinking, hey, I might be able to use this product. What would the interest rate be?
It roughly would be around 6.5% to 7% on a 25-year fixed amortized over 25 years.
Is it based on an index, or is it just whatever the lender quotes?
Typically they go based off of a 10-year bond.
Okay, so a spread over the 10-year?
Correct.
And what's the spread today?
Again, it depends on the client. There's different factors. If the client starts a banking relationship with the bank, they give a lower spread. If they're a very strong client and they bring over the operating accounts to the new bank, it's a different spread. So it's very hard to say one income spread. There's different factors that go into the rate.
All right.
Well, good. I mean, we have some other questions, but just for our listeners, we have a lot of business owners listening to the podcast. This might be a great product if you're paying rent right now and you want to get into owning your own building or owning your own real estate. You only have to occupy at least 51% of it. You can get in for 10% down. Both are huge wins. So maybe this is a product that you guys can check out.
Yeah.
So Kamyar, because you're in the Los Angeles area, we'll ask you some specific questions. How is the general real estate market and lending market in Southern California these days?
Southern California right now, it's mainly, buyers are buying owner-occupied properties right now. There's not a lot of, money going into investments in terms of commercial properties. You do have several of the bigger people who are in the multifamily space who want to pick up other multifamily buildings. But the smaller people who have one or two multifamily buildings and it's not in a good spot, they might be hurting. When they come to, because on those buildings, you never have a fully amortized fixed product. So you might have a 5, 7, or 10-year fix, amortized over 30 years. And a lot of those loans are becoming due this year and next year. So those people, when they go to refinance, they most likely have to come money out of pocket to get the refinance done. Otherwise, they will lose the building.
Yeah, good point. We've been talking about that over the last 6 months or so. Rates have stayed higher longer than we thought. And a lot of people during COVID and even before got into rates that were 3, 4, 5% fixed. But as you say, in commercial real estate, not very many self-amortizing loans. So you have these 5, 10-year fixed terms that are coming due now. I mean, if you got a loan in 2015, 10 years is next year. Now you're going to go from a 4 or 5% rate. And if rates stay high through next year, we're talking 7, 7.5, 8. And so do you see, or is it your view that maybe if rates stay stay higher for longer, that we're going to see some distressed properties on the market, maybe some foreclosure pressure, things like that?
I believe so. Yes. And one thing when you're getting a loan, if you're not so, if it's your first or second, third time when you get a commercial loan, let's say on a multifamily product, you have to really look at it and see if it's a balloon payment after when the ARM adjusts or if it becomes variable. Because if it becomes variable, you don't necessarily have to go refinance. But if you have a balloon payment, you have no other choice. And people are typically not aware of that when they're getting their loan up front.
Yeah, we I think have the 5-year fixed deals. I think those loans just come due.
Yeah,
and so we've got to go and take what the market gives us.
Yeah, hopefully by the time they come due in 5, 7 years or whatever, most don't. Well, at least for our properties, we've negotiated higher lease rates. We've paid down some debt, and so when it does come time to refinance, hopefully the amount we have to refinance is less.
Or equal to at least what we already owe.
The value of the property's higher, have it reappraised. So,
well, another thing we wrote down that we wanted to ask you, because your website kind of indicated it, are there any creative strategies that you're using today in order to get people in commercial real estate? I don't know if there is, but if you have any that you want to share with people, because it is a little bit of a tougher environment.
In terms of creative strategies, it would again be on the SBA side, because there are SBA 7(a) products which are projection based, so you don't necessarily have to qualify off the tax returns. They qualify you based on projections, but those are typically prime plus 1.5 or prime plus 2.75 rates, and they're variable rates up front.
Projections of what, the income that their business, the what?
Of the operating company.
Yeah. Okay.
Okay, so if you don't have the tax returns, but let's say you're forecasting a lot stronger sales this year because you've grown, you can still maybe qualify to get in your building, but the rate's not going to be 6.5; it's going to be prime plus 1, which is like 9.5.
It could be probably 9.5 all the way up to like 12.25, because the max they can do is prime plus 2.75 on those.
Prime plus 2.7, so that's getting pretty expensive. But I guess if that's your only option,
yeah. Yeah. Well, so Kamyar, you're probably more in tune with, since you're sort of an expert in the lending, what do you think? What's your forecast for, say, the next 12, 18, 24 months on rates?
Based on what I saw, everybody's thought process was a lot different beginning of the year. We were all, hoping or expecting rates to,
right,
on the prime side come down maybe 2 or 3 times.
Yeah.
But with the meetings that came up, and the inflation factors, it has not. And, typically in an election year, rates do come down. The last, let's say, 40, 50 years, that we've always seen rates come down during an election year. Mm-hmm. But this time around, we are in a stagnant inflation. And in terms of what's going to happen to rates in the next 12 months, it's very hard to say. There might be a reduction. There might not be a reduction. Do I see it going higher? I doubt it, but there's always a possibility. But overall, I think it's gonna. It might not come down for a unit.
Yeah, certainly history says that the rates come down a whole lot slower than they
Go
increased.
Up. Yeah, which is opposite of the market, right?
Yeah, right.
The market goes down fast, like a lead brick, and up like a balloon. And but interest rates come down hard and go up. Or they go up fast and come down very slowly.
Yeah.
I think I tend to agree with you. We'll kind of wrap up on this point. Everybody thought we were going to have rates started coming down. Inflation isn't what it was. Got up to almost 9%. It's like at 3% now, but it still isn't to the 2% target that the Feds want. And I think they see the negative impacts of inflation being worse than whatever pain the economy is going to see with keeping interest rates higher for longer. So it's a game they're playing.
Well, and the economy is still doing pretty well, right?
Overall, the economy is doing well. Even though individually sometimes people think I'm not doing as well as I want, but the data is the data. Unemployment is really low, and businesses are generally doing pretty well, and occupancies are high. So, well, go ahead. You have a thought on that?
Yeah, I mean, look, after during COVID, the amount of money that we printed that created all this inflation, we've never had a history of printing so much money. Even in 2008, they did not print so much money like they did for COVID.
Yeah.
So no one's ever experienced how to control this now.
It was I think between Trump and Biden administrations, it was like $7 trillion, or just something ridiculous.
It was like 30 trillion.
30 trillion
in the world.
In the world. Yeah, that's right. Well, okay. We'll wrap it up there. We really appreciate your time. I think bringing up SBA loans to our audience in case they ever want to get into a building, it's a great option if you're going to be an owner occupant of at least 51%. So how do our people watching the podcast get a hold of you? How do you want them to be able to reach out?
And I think you have a podcast as well if you want to plug it.
Yeah, I have my own podcast. It's called Minds of Commercial Real Estate. We have a YouTube channel. They can call here at the office, 818-703-9337, or they can contact me via my email, KREZAIE@wembleysinc.com.
So Wembley's Inc., wembleysinc.com is the website. We will post his email address and information in the link. And Kamyar, really appreciate your expertise on SBA loans. And guys, we'll catch you next time on how to invest in commercial real estate.
Thanks, Kamyar.
Thank you for having me.